A very warm welcome to you as you join us on today's episode of Tax Matters. Last week, the biggest news was the presentation of the 2021 budget by President Muhammadu Buhari. Of course, you recall that this same president performed the same feat in the year 2019 when he presented the 2020 budget on October 8, 2019. Once again, President Muhammadu Buhari has repeated the feat, making it possible for Nigeria to repeat the achievement of his government in returning Nigeria to the January to December budget cycle. As usual, tax and taxation took the center stage in the budget presentation speech. For example, MDAs are now expected to generate revenue, no matter how small. This is part of the general focus of government on internally generated revenue. Efforts are also being made to block revenue leakages and monitor independently generated revenue.
As you will observe, the format of the 2021 appropriation bill has been modified to include budgeted revenues, no matter how small, for each MDA, that's ministry, departments, and agencies, to focus on internal revenue generation. Accordingly, I implore you to pay as much attention to the revenue side as you do to the expenditure side.
You will also recall that as part of the innovations for the 2020 fiscal year, the Finance Bill 2019 was passed to guide tax administration in the year 2020. We have good news for you. Finance Bill 2020, which will guide tax administration in 2021, is on the way.
I have directed the Minister of Finance, Budget and National Planner to finalize the Finance Bill 2020, which will be forwarded for your kind consideration and passage into law shortly after today's 2021 budget presentation. The Finance Bill is to support the realization of our 2021 revenue projections, adopt appropriate counter-cyclical fiscal policies, and enhance the efficiency of fiscal incentives.
President Buhari also spoke about the efforts being made to overcome the current fiscal constraints and to make life easier for the poor and vulnerable.
The government is already implementing several measures to overcome our fiscal constraints. In addition to the strategic revenue growth initiatives, we are leveraging technology and automation, as well as more effective monitoring of independently generated revenues. Our efforts are aimed at addressing revenue leakages and redirecting scarce resources to the poor and vulnerable. These efforts include A. Deregulation of the price of petroleum products. B. Ongoing verification exercise with IPPIS. And C. Implementation of service-based electricity tariffs. The new petrol pricing regime has freed up resources that were allocated to subsidize petroleum products. These reforms have released trillions of naira for allocation to other priority areas.
That is our cue for today's episode of Tax Matters. Last episode, we shared with you the thoughts of some industry players on the effects of the years of the locust, the many years of fuel subsidy on the Nigerian economy, as well as the positive effects that the removal of subsidy will have on the economy going forward. On this episode, we have more industry players in the house, plus the numero uno, the #1 taxman in Nigeria, Muhammad Maman Nami.
Do you provide goods and services? Then you must answer these important questions. Are you registered for VAT? Do you charge VAT on the goods and services you provide? Do you keep records of all your transactions? Do you file VAT returns? Do you remit VAT collected to government coffers? If your answer to any of these questions is no, then you are breaking the law. The law demands total compliance. Therefore, you must register for VAT. You must charge VAT on goods and services. You must file VAT returns. And you must remit all VAT collected on behalf of government within 21 days to the bank nearest to you. To do otherwise is a crime punishable everywhere in the world. VAT is prescribed by the law. Do the right thing. Collect and pay VAT. This message is from the FIRS. It pays to pay your tax.
Alaja Sofura Segosime, Chartered Accountant, Fellow of the Institute of Chartered Accountants of Nigeria and Fellow of the Chartered Institute of Taxation of Nigeria, retired as a Coordinating Director at the Federal Inland Revenue Service. Alaja Segosime, thank you for joining us on Tax Matters.
Thank you very much.
The price of PMS has finally been deregulated. Please give us a sense of what the regime of subsidy operated over the years has done or did to the economy of Nigeria.
It is better imagined. I am very happy that government has decided to take the bull by the horn, because a lot of trillions of money were being used to subsidize a few who had cars, generators, and the rest, whereas it was not adequately benefiting the ordinary man in the street. So a lot of destruction has happened, and I believe that this is the time to right the wrong by removing the subsidy. And we pray that Nigeria, the government does not go back on this.
This is the time to right the wrong. We move on. Mr. Matthew Bojumbola is the Director Tax Policy at the Federal Inland Revenue Service.
I think the starting point is to understand that the philosophy behind subsidy was to say we are producing oil and therefore there must be direct benefits to the citizens. Just talking about the parable of a farmer, the children will probably be the first to heat up the yams before taking the rest to the market. However, over the years, when we operated the subsidy regime, we have had to do what is called economic losses as a result of that, because we had to do a trade-off of either giving subsidy or collecting the full prices and using that money for something else. For example, building more roads, building more hospitals, or rejuvenating our educational system. So over the years, if you listen to government reports, so many trillions have been spent by way of subsidies. I think the major other issue that came with that is the fact that the system also was somehow porous to abuse, such that, I mean, there were claims paid which, according to reports, should not have been paid. That's another issue we had. The third one is the economic sense. How do we maximize the benefits? Now, if as an individual you give me a subsidy, it reduces my cost, that is true. However, are we able to pull that reductions and pull them to a more beneficial use? For example, if the roads are bad and we can't maintain because I've collected subsidy, yes, I have reduction in the price of fuel, but then I care more on the repair of my vehicles. So you can see there's no one size fits all in all of this, but all we now do is to do what is called the cost benefits analysis, and for the purposes of one, transparency, because in the subsidy regime does not have that level of transparency. Number two is maximum benefit. So do I maximize my benefit by taking maybe 500 naira is due to me in a month, is given to me, or can we pull that 500 naira from all Nigerians that are enjoying that benefit and say, let's use it to do this specific project to benefit all? And then the third aspect of it is, how does it go round? Does it really go round? Because then it is arguable, but the truth is that it may not actually go round at the end of the day. So whereas if we had used the money for a public service or a public goods, like a hospital, like a school, like roads, like bridges, whatever, the benefit goes round. So these are the issues that one can distill from the operation of the subsidy regime hitherto.
Now, we had it said that the price fixing of old was a disincentive to investment in the sector. For example, the setting up of refineries. Is that true?
It's absolutely. Price fixing does not allow the market to determine the price based on supply and demand. I'm even very happy that this morning Punch reported that the marketers predict lower pricing in the next few weeks and months to come because of the stance of the regulation. The market is already responding to international market, dictates of the market. So I believe strongly that that is the right way to go. It will help to encourage investment. It will help to even determine the quality and price of the products. It will help employment. It will help to boost employment. It will also help to boost the economy. And perhaps it can even help to boost the reserves that we are crying for right now. It will also help to bring about a fair determinant of foreign exchange pricing. Because I see and I hear that Dangote wants to, Dangote refinery is coming on board, and Dangote refinery is going to produce so much so that it will be available for export.
The basic principle of economics teaches us that when prices are held down and people are not able to anticipate or within the frame of the economic free market economy maximize their investment, then you will reduce incentive for people to invest in that. For example, we deregulated the midstream, and the midstream is where we refine petroleum, many years ago, more than a decade. And several people collected licenses. But of all the people collected licenses, apart from the Dangote refineries that is nearing completion from what we had, how many more do we have? None. And why? Why is because if someone has bought crude oil, for example, at let's say $40 per barrel, invested heavily in building factories and all that is required, and let's assume for argument purposes the cost of production is 150 naira. But government says you can only sell at 100 naira. So it is therefore almost impossible to get people to put their money in that kind of an environment where government policies are not very stable, where too government's ability to pay subsidy may not be guaranteed, and generally you find out that people in such an environment who have the money, they will not have the confidence and then the comfort to say, let me put my money here because of this risk. Number one, they are not sure they can recover their cost. And where government promised subsidies is subject to availability of money for payment. Whereas where you have said, charge your price at economic price, then you will see that many people will come into that business. The fear that there may be issue of monopolistic behavior will actually no longer be there, because where economists also taught us that where people make abnormal profit, many people want to enter into that business. And the more people enter into the business, the lower prices come. And over time, it will find an equilibrium where there will be no super profit and there will be no losses.
If subsidy was a disincentive to investment in refining, will deregulation attract investment to the sector?
That is actually the whole essence, in my understanding, and listening to what government have said at various fora, is to say, look, we need to liberalize the market. We need to allow people to come into the market. We need for people to invest. We can do with about 10, 15 Dangote refineries in Nigeria. We can become the refiner for West Africa, for example. We can start with that. Ultimately, we can become the refiner for Africa, whereby we have the petroleum, we can do our refinery, and then we can sell. And two things that's going to happen. Number one, it's going to generate economic activity, so unemployment is going to reduce. Number two is that there are going to be spin-off of other industries. For example, I mean, we used to make shoe shining polish in Nigeria. I understand that the basic material for making polish is from the byproduct of refining activities. Then not only that, then we are also able to bring down prices, because then it's possible to now have specific refineries and say, look, I only want to sell my refined product, for example, in Sokoto State. And then it captures that market. Somebody can say, no, I want to do Enugu State. It captures that market. And before you know it, the super profits that may appear at the initial period will thin out, and companies engaged in that refining business will only be making big profit from volumes. It will now be volume-driven profit rather than price-driven profit. So if we have and we are able within our own capacity to refine our products, you could set up a refinery and say, look, I'm not going to produce PMS, for example. I'm going to produce only diesel. And then you are able to produce, and then our trucks are able to get diesel at competitive prices. Our generators, because for the time being we are still stuck with that, are able to have diesel at very competitive prices. Then you will see that the multiplier effect, that prices generally will go down.
Next episode, we will bring you more excerpts from our interviews with Alhaja Sekosimi and Mr. Bojombola. Of course, we still have more from other gentlemen who spoke to us in the first installment in this series. But today, permit us in the remaining time of this episode to bring you the perspectives of the #1 taxman in Nigeria, Executive Chairman, Federal Inland Revenue Service, Chairman Joint Tax Board, Muhammad Maman Nami, on this issue. What did the subsidy regime of the past do to the Nigerian economy?
We all know before now, based on a report or a study by a National Assembly at a time, precisely in 2007, about 6.8 billion has been spent between 2004 and 2007 as subsidy in Nigeria to marketers. These are funds which ordinarily the government should have used for purpose of funding social amenities, for purpose of funding infrastructure development, for purpose of fixing our refineries that are not currently operating. But instead of making this money available for the good of the common man, the money was used in paying for subsidy for the marketers at the expense of the common good of everybody in the country.
Okay, sir. Now, what does this deregulation mean for the Nigerian economy going forward?
Thank you. I think what this means is that in a not distant time, if government is able to save from this deregulation, this money that is being paid to individual will be invested in our economy, will be plugged back to the economy. And when that happens, the multiplier effect of it, you all know what that can do. This is because with the money being invested in the economy, other sectors will be able to go, particularly the petroleum sector will be able to function optimally. If this money are used in fixing the refinery, the multiplier effect is that jobs will be created locally. What that also means is that locally, instead of wars continue to import this product, we produce it locally, and there will be less pressure on our foreign currency need. The CBN will have less need for it to struggle to provide forex for people that will continue to import this. Another key thing that will happen is that it will lead to growth in the economy, and when the economy grows, there will be opportunity for people to be able to pay taxes, because that is what concerns me most.
Yes, sir. You actually went ahead of me, because I was going to ask, what are the expected gains of this deregulation for the tax system?
We are struggling with a tax to GDP of about 6%, with more wealth being created in Nigeria. That's why more taxes will be paid, and we are going to be able to raise the bar. Another thing is that you are going to encourage investment into this country. In a situation whereby the prices are regulated, I know even if you have money, you will not be able to invest in that. This has happened before with the telecommunication sector. In a situation whereby everybody has a level playing ground, a lot of investment coming into the communication sector. So what the deregulation will bring about going forward from an economic point of view is that the forces of demand and supply will be that which will determine the price at which this will be sold. This that we go to sleep at the filling stations in the past, though we do know the government has been proactive over the past 4 or 5 years, and we have never witnessed that. But I think this will finally bury that kind of ugly scenario. People will stop going to filling stations to stay overnight. And I can assure you also that after a while, just like it has happened in the telecommunications sector, the prices will continue to come down, because we have Dangote refinery coming on board. If it will operate freely and nobody is telling Dangote refinery this is the price at which you are going to sell, so also another person will come out with another refinery very soon, in maybe Niger Delta, or maybe in areas that oil is being discovered. And as a result of that, there will be serious competition, and people will now opt for the best.
There you are. The regulation has come to stay, and we must learn to live with it. But from what we can gather, there is a silver lining in the cloud. Like we said last week in the first installment in this series, it is hoped that those charged with managing the positive fallouts of the deregulation will be diligent in their duties. Let us remind you that the 22nd Annual Tax Conference holds between the 4th and 6th of November in Lagos. Make it a point to attend. See you there, and see you next week on the next episode of Tax Matters.